Welcome to the Performance Banker Podcast. You'll hear banking industry experts providing unique insights and expertise to help bankers achieve higher performance, obtain outstanding results, and gain a competitive advantage. Here's your host, Tanya Gossage.
Hello, I'm Tanya Gossage with Gossage Performance Consulting, and with me today is Carissa Robb with Constant AI. Carissa, thank you so much for joining me today. It's so good to have you here. I'm looking forward to this conversation. When I was in banking, I can tell you we would have loved to have had this type of tool in our toolkit. Tell us a little bit about yourself and how you got started with Constant AI.
Sure. Thank you so much for having me. We were excited to join. And when I was in banking, I would have liked to have this kind of toolkit.
Sure.
So, I'll share a little bit about my background, and that will largely drive the evolution of how Constant came to be. So I'm Carissa Robb. I'm the President and Chief Product Officer for Constant. And I always say I'm a recovering banker. So I spent my entire career in loan servicing and collections. And my latest role was running U.S. loan servicing for TD Bank. And that included the auto loans, the consumer, retail, and commercial. And it was such a unique role and time. So during that stint, I had been in collections and servicing, and then spent quite a bit of time with our regulators as well.
Sure.
And it was such a fascinating period where we were acquiring rapidly. And the industry, this is kind of consistent across the industry, but 2009 to probably 2018, you're going through this series of rapid acquisition. The failed banks are being introduced, and we're taking over and acquiring failed institutions. Credit is starting to falter a little bit. The Great Recession comes into play. The CFPB gets their teeth, right? And we start to see the weight of regulatory change. So when you're in a back office role, you tend to see a lot of the exposure from manual processes and, best effort. You've got such subject matter experts that are keeping the lights on. But when you scale and you go through these kind of dynamic periods of change, you're just so exposed for processing errors and ultimately, negative customer impacts. So that background followed me when I joined Constant 3.5 years ago, and we said, there's a way to automate this kind of industry-old gap in servicing and really bring automation and scale into this world. So that's where we've been standing up for the last few years.
That's awesome. So tell us a little bit about the problem, Carissa, that most banks have that your solution can solve.
Sure. So most folks understand that like the servicing and the collection space are super critical toward just responding to customer needs. It's also super manual. And so because it's a loss center, it can be a little bit more challenging to get an investment in innovation and technology. That money has traditionally gone towards revenue generating departments. And so origination, how do we get more marketing to prospective customers? And so what ends up happening is you'll have highly tenured staff, again, experts in what they do, but they're used to putting Band-Aids over some problems with scale, just to protect the bank and do the right thing by the customer. And so as you start to grow your company organically or through merger and acquisition activity, the exposure of those manual processes is magnified.
Uh-huh.
And then you couple that with the ability of customers to launch complaints a little bit more visibly, publicly. You have the regulators that are in there coming in and kind of poking holes in processes. And so most folks are going through the exact same challenges of how do we get, because they genuinely want to, how do we get answers more quickly out to the customer correctly and just mitigate that customer frustration point. So particularly with FIs, they're saying, well, do we build it in-house? Do we partner? Do we buy the solution? Where do we start? And being a loss center, that initial conversation of how we get that investment can be a little bit tricky.
Yeah. So I remember, as a banker, the manual processes that it takes to get that information out. It's not quick. It can take an hour, to send something to the back office to get the information back. And now, in today's world, you fill out a document, send it to the back office. It can take up to 48 hours is what, we're telling the front line to tell the customers today. So, so what is one of your favorite stories that you can share with us regarding some of the results or success?
Yeah, great question. So it's always nice to be able to share the positive stories because I'm so used to sharing the horror stories from
Yes.
so the most obvious one, we had a client that was working through an issue with pay frequency changes and in the subprime near prime space. And what ended up happening was there was a little bit of a misstep with some of the gating requirements on who should actually receive the benefit of a pay frequency change. Very similar to due date changes. And what was happening was there was this operational expenditure of energy to review all of these requests, but it wasn't actually curing the delinquency. So you've got customers asking for what they think is the right assistance. You've got a client who is desperately trying to respond, but the end result was not actually curing the root cause or the problem. So one of the benefits of our team in particular is we are a technology company, but we've spent decades in the weeds. And so we were able to partner and just kind of walk it through, unwind the policy requirements, unwind the customer experience and say, what do we need to get from them? What do we need to evaluate? And we ended up seeing just a remarkable improvement in offering the right solution. So we could separate and say, you know what, this isn't really about when you pay, it's about the amount you're paying, or it's about not being able to catch you back up. And so let's redirect you over to a hardship review rather than just kind of kicking the can on the actual problem. So they were so thankful, and we were so motivated to be able to sit at the table and say, "Hey, let's work through this together and really get to the right process, both for the back office, but most importantly for their customer base."
That's wonderful. So, what are some of the toughest challenges that banks have had to overcome?
I have so much empathy for the folks that are dealing with servicing in this particular space. Very similar to the Great Recession, but you have your day-to-day challenges that, absent what we've gone through with the pandemic for the last 2 years, would have been sufficient. It would have been challenging enough. And so now you introduce this kind of market fluctuation, and you've got total opposite ends of the spectrum where some folks are doing really, really well, and you want to focus on growth and retention. How do we increase wallet share with that particular customer? And then you have other folks that are really struggling, and how do we also tackle that to mitigate our losses? So the biggest challenge is, how do you serve your entire population with bookends that are very far apart? And the root cause of some of the challenges in being able to do that really has to go back to data. Do you know enough about your customer? AI is always the kind of frequently used term, but sometimes it's just simply asking what's going on in a way that you can say, okay, how do I now analyze that and make my interaction with you hyper personalized? So that's the type of thing that we really want to focus on is, can you just ask your customer how things are going? Can you ask them what they're interested in? Can you be really strategic in what you're marketing to them? So that data, that really kind of goes beyond know your customer, what we go through at origination, but can you continue to learn about your customer in the servicing space and translate that data into a strategy? So that's been one of the real challenges, I think, is making the entire relationship of a borrower, managing that loan obligation, a little bit more cyclical and intentional. And technology has been kind of the leading gap in folks having trouble with doing that.
Carissa, what features do you offer that help banks deal with that challenge?
Yeah, so we have had the most success with our banner feature, and it's doing exactly or solving that exact problem of what do you need to market or where do you want to turn that particular customer's attention to. So let's take someone who's delinquent; they're 60 days past due. The goal for that particular account is to very quickly right size how complex, how severe, how long is this kind of interruption for payment behavior going to last. So on that one, we have banners that will say for our customers who are, let's say, 55 to 75 days past due, let's direct their attention to a repayment feature or an extension program. Let's get a little bit more granular on that reason for default. So that's much more intuitive and relevant than using that opportunity to try and cross sell a product or refinance their loan. That's not what that customer needs in that moment. They need help on rectifying the delinquency. So um, that the way that we've built the banner configuration is you can be very intuitive and say, this customer needs to go in this direction. But now let's take a solvent customer, 3 years of excellent payment history. Perhaps the FICO refresh came in at north of 680 or 720. That's a very different conversation. Perhaps that's marketing. They have an auto loan and you want to market a home equity, or you'd like to upgrade. They're coming to the end of their loan or lease, and you want to upgrade the vehicle. So those are things that now you've transitioned. You've used the exact same technology, but you've transitioned from solving a problem about loss mitigation and default into another area of growth and retention, and just giving that particular customer the customized messaging and strategic programs that make sense for where they're at today. And that's really challenging to do. Sometimes we capture origination data, and that's the last time we really talk about the solvency of the customer. So there's, if you refresh and you invite them to come in and say, hey, take a look at our auto rates. Or we could save you $100 if we refinance you from another institution. Those are opportunities that could really magnify market and wallet share for an FI.
I know that the banner feature, as we've shown it to some of our bankers already, that has been one of the favorite features that has been called out as we've shown it. So let's talk about the regulators and the regulation environment. Tell us how that plays into it.
Sure. So everything that I've been mentioning are things that are largely driven by consumer preference. Especially after the pandemic, folks have wanted to shift their needs to an online format. But the regulatory expectations are not going to get any more lenient anytime soon. And so we are dealing with,
unfortunately, not.
Exactly, right. And it's reflective of what we went through in the Great Recession. It's very similar if you start to look at the parallels. So we had a breakdown in 2009 that lasted for quite some time. And the result of that breakdown in operational controls was increased regulation. And here again, you've probably seen the notifications about the warnings for illegal repossessions and the CFPB putting the industry on notice again, this time in the auto sector. Mm-hmm. And it's interesting because the values of auto loans are so high right now that it's easy to mitigate your loss if you simply go down the path of repossession. Mm-hmm. But we would have never said in the foreclosure crisis, go take all the homes back because there's equity in the homes and try and recoup that way. The regulator stepped in and said, no, you need to make sure you've given them every sort of option to retain ownership before you go through with the negative consequence of the foreclosure. And so I think that's the same messaging that we're seeing in the CFPB's warning on illegal repossessions, is just to make sure you've gone through the appropriate steps and procedures to encourage ownership before you start to capitalize on the equity and the collateral. So that's the standard, and nothing really new. Like, just do the right thing before you start to redeem your interest in collateral. But the operationalizing of that process is a challenge. And so when we built the platform, there were a couple things that were important. One was first and foremost UDAP, and that is so great, right? We understand, the unfair and deceptive acts and practices, but how do you make sure that your staff is properly trained on that, and that your tools are preventing intentional or unintentional exposure for violations of UDAP and consumer protection? And so when we started to structure our features and our processes, we paid particular attention to messaging. How do we make sure customers are understanding the steps, understanding the short-term benefits, but the long-term implications of something even as simple as an extension? The accrual of interest, what that does to your maturity date. And so you'll see as we move through self-service and digital automation and features, that element of education and transparency is kind of first and foremost, so that your customer has every opportunity to really understand what they're getting into. And then the last part of that is make it auditable, to prove it, right? We always we heard it with COVID, the regulatory reprieve for assistance, making sure that the regulators support lenders and servicers in saying, get the right help to your customers quickly. But we all know, we've been through an audit, that 2 years later, when it's time to review that effort, that reprieve is not always there. So the standards are a little higher. And so we wanted to make sure that we can empower our clients and our partners to say, here's what we offered. Here's the folks that were declined. Here's the reasons why they were declined. And here's how they performed, after the relief application was approved.
Right.
All lessons learned from things that went a little left in our prior real life experiences.
Right. All the hard way. What about integrations? Want to
Sure.
talk about integrations for a minute?
Absolutely. So one of the challenges in my prior roles would always be, and mentioned this in the beginning, proving ROI, getting the investment to put into technology for the back office. And so one of our goals was, how do we do the integration in a way that doesn't require a total overhaul of the infrastructure? So if you're on a green screen, or if you're on a web-based Cadillac solution, it's okay. It's almost agnostic. So we've invested a lot of time and energy into being able to work with the client where they are today. So their online banking platform, you can keep it with single sign-on, complementary features to what your customers see today. Your payment provider, again, complementary, not redundant. And then again, the back end of the core platform where we source that data. So we have been able to navigate the challenges that have typically gotten in the way of fast and immediate implementations, and really meet the customers where they're at. So it's been seamless from the customer experience, where you don't know that you have multiple partners supporting your customer journey. That's totally seamless and white labeled. And then from the client perspective, just allowing the experts to be experts. So your core accounting system is totally necessary for those key features. Your online banking provider or your payment provider, let them be experts in that process. And then we show up in the servicing space to really help tie all of that together and push the industry forward.
Okay, so we talked earlier about all of the manual processes that are happening today. And so when we install Constant and we integrate all of this process, sometimes employees, Carissa, they get concerned about the automation process. What does that mean for my job? They get really concerned. And so how do we create buy-in with staff oftentimes when we put in technologies like this?
Sure. Great question. I remember when bots started to be introduced to banking, my staff literally thought that there were robots that would be dropped off in the bank and everybody was going home. And it was overwhelming, and we had to do a lot of education and informing folks of what the real goal was. The other challenge is there were also times where, as the executive, I would be asked to trim the operating budget. And obviously the number one line of an operating budget is usually headcount. But you're looking at these kind of conflicting goals. I don't have enough FTE to do the existing volume, never mind trim it back, and never mind scale and being able to handle that volume. So obviously that's a soft spot for me, having run the organization, and I try to really stay away from looking at this as a headcount play. Now, if you have OpEx challenges where you do have to trim some of the headcount, totally fine. It supports that effort. But the real value and the goal is saying it's not about eliminating staff. It's about taking that expert, that skill that you have in that person, and reallocating it to a higher value task. And also being able to support things like COVID, where your volume literally increases by hundreds of percent, right? Like going from maybe 10 to 12 requests for extensions a day to hundreds. So it's preparing for market shifts, it's preparing for acquisition activity, and really just empowering you to be less dependent on a manual processing cycle. So improving efficiency ratios, having your lead back office personnel be able to take on more loans per day, and just reallocating that staff. And we have folks that say, when we talk about ROI and helping them do the business case there, it's kind of a combination of, do you have an issue where you need to manage through a layoff, or are you looking more to manage through attrition,
right,
or scale? And it's usually the last two. And sometimes it's neither. It's just we have to meet the industry where they're at, and we have to make an investment in the technology. That's how people are starting to shift and say, it's not really ROI, it's ROX. How do I turn on my customer experience to stay relevant?
Mm-hmm. Absolutely. Well, and oftentimes, there's plenty of work to be done somewhere in the bank. And so oftentimes they can shift those employees around.
Absolutely.
So what should people do if they have more questions about your technology and they want to see a demonstration?
Yeah, my email address is right in the show notes. So I'm always up for a conversation, whether it's about the Constant platform or just things that are challenging an organization. We thrive in those conversations of helping to unwind problems or thinking about technology strategy.
Yes, absolutely. So do you have any inspiring words for our audience as we end the podcast today?
Sure. There's so much low-hanging fruit. This has always been an area that's been a bit intimidating as far as traditional technology projects, both from cost and timeline. We have just made leaps and bounds with partnerships with fintechs and FIs. And so I would encourage folks to just take that first step, just have the conversation. And we can always try it on for size and see how things fit with your organization. But if you start today, you're that much further ahead on that strategy that is going to kind of be expected. Customers are saying, meet me online. Regulators are saying, do it better, faster. And then everybody's kind of vying for that same market share. So
right,
it's a real partnership opportunity, and we're excited about it.
It is. And I'm seeing more and more communication out there today, even from, the banking support groups saying to banks more and more often, hook up with fintech companies.
Yes.
And, because they have a lot to offer, so I think that's a fantastic thing. You've offered so much value in today's podcast. Those of you that are listening in the audience today, please leave us a review. If you've gotten value, tell us what you've learned. Ask questions. We'll answer those questions there as well. Share the podcast with your friends, your family, your coworkers. And until we see you again, this is Tanya Gossage, the Performance Banker, and we'll see you soon. Bye.
Thanks for listening. Be sure to download and subscribe wherever you get your shows. Find more content on our YouTube channel. Link is in the show notes. This podcast is sponsored by GossagePerformanceConsulting.com.